What is good, guys? This is gonna be a video for PvP and the free member. I'm gonna go over how to find daily bias and high probable drawn liquidities for the PNF model. So I don't really like looking at the daily time frame. Let's get this out of the way. I normally just it's decent to have like an overlook, but I don't really care about if if we take out previous day high, previous day low. It's not too important for me because I usually don't take that long trades. I mostly look at the hourly as an example of today. Start a new example of today. This is somewhere around when I started trading. And what did I see? Obviously, from the news with the war, I saw this high probability drawn liquidity. Why is it a high probability drawn liquidity? Because it is a significant high inside of a failure gap. This is the most important drawn liquidity for me. Significant highs and lows inside of failure gaps. Most important. Second important for me, stacked up highs and lows, and here also draws on liquidity inside of this fair value gap, relatively equal highs. So what I wanted to see today for me, I wanted to see we come up, we tap into this new week and new day opening gap, sweeping out this liquidity and then distributing lower. However, as I said in the VIP, I was wrong about what's happening because, yeah, I said gold's gonna pump and Q gonna drop. I said that. However, like after the market open, we dumped on gold and we pumped on NQ, which is pretty off. And I said I might have to have a check on the news because maybe something new happened, and I didn't check yet because it's the second video directly afterwards. But let's just stick with the how to find daily bias. For me, you don't need to know whether the whole new next day is gonna be a bullish day or a bearish day. Not that important. Very important is to see the 15-minute drawn liquidity, which is going to be swept next. As an example here of my trade from today. This is what I saw in the 50-minute. No very obvious highs here. Yeah, we have some highs like this swing high. We have this fair value gap we're dealing with right now, this high inside of this fair value gap. And we just swept barely, but we swept this low inside this fair value gap. This wick is lower than that. All right, we swept this liquidity inside this fair value gap. You get the thinking. I'm only looking at fair value gaps and liquidity like in fair value gaps. Most important for me. After we swept this liquidity, there is no need for us to go from here all the way down to here and then shoot up. We swept enough liquidity to go to the next liquidity. So after we swept this liquidity here, which is obviously the next liquidity, this is going to be swept this liquidity. So swept the liquidity here, then I obviously scale to the lower time frame, search for a PNF model. We got a PNF model, and then I targeted this 50-minute liquidity. In the end, I was right about that we gonna hit this high inside of this new week opening gap. However, I wanted to see it happening a little bit differently, but as I said, I was done for the day before that, and yeah, was a decent trading day for me again. let's just give another example how to find daily bias as an example on gold. As always, started, let me leave this, started at the hourly and said, damn, we are bullish. Why? Because we have this new weak opening gap. We traded into it and then pushed out of there. However, very good draw on liquidity for us to hit today. We hit it. Yeah, but I want to see us still climbing upwards. If we now climb back to all-time highs, would be very good. Climb back up to all-time highs would be decent. All right, so at the hourly I then saw we were pretty bullish, and we got like I took a break even today. So yeah, for everyone, I took a break even and the win today. Like I guess I said it in the free trading chat. I took a break even because I was longing to these highs because they were pretty overlining with my standard deviation tools, which is also how you can find high probability liquidity and not just guessing which liquidity is taken out next. With the standard deviation tool, you're gonna like calculate which is the next drawn liquidity which is going to be swept. All right, so we came up, we tapped into this, we got a very good reaction out of there. We come down, tapped into this hourly. What is the structure? What is the structure? If you just see this, what is the structure? Bullish. Yeah, we have this very strong drawn liquidity, but the structure is still bullish. Structure, very important. So I was bullish and targeted these highs. Then I got break even and we tapped into this new week opening gap. What is good about like the hourly when we tapped into this new week opening gap? Yes, we never closed below. We tapped into it and now we're trading higher. You could have taken any longs here. No really good setup here. No really good setup here. No really good setup here. Oh, this is the best setup right now. This IFAG here long, and then maybe we're going to get a very good long setup here. Like if we inverse this, this is gonna be probably a very good setup because we have these fair value gaps, the same as I'm talking about always. You enter, then you take your fib, you look 2 level, perfectly aligned with this liquidity. This is going to be hit next. Not gonna take any trades now because, as I said, I'm done for the day. If you close good, and this is a very good momentum, close above this fair value gap. It's actually way smaller than I drew it out. If we close above this fair value gap, I could see this work. So this is the video about how to find your daily bias. I only look at the hourly and the 15-minute, like the 15-minute, which drawn liquidity is going to be swept next. Always have that in mind, which is the next 15-minute drawn liquidity, which is going to be swept. And on the hourly, look for, are we bullish, are we bearish, and yeah, that's basically it. How to find if we're bullish or bearish, like in an example right now, we dumped like high, lower, low, lower, high, lower, low. Then we inverse this fair value gap, which is a sign that we are gonna be bullish, changing bullish, and now we're actually changing bullish, probably gonna hit this fair value gap, next, and yeah, this is how to find daily bias. It's as simple as that, guys. See you in the next one. Thank you for listening and watching this video. Leave a thumbs up, leave like a comment, and I will see you in the next one, guys. Love y'all. Bye.